Welcome to the deep dive. We're here to unpack the really big shifts happening right now, cut through all the noise, and get straight to what actually matters for you. And this week, wow, it feels like a proper turning point for digital finance. I mean, the whole crypto world isn't just evolving anymore. It feels like it's really stepping out onto the global stage. We're seeing major laws passed, big market milestones, and some countries making really ambitious strategic moves. So, our mission today is simple: break down all these recent events, looking at the sources we've gathered, focus on those key shifts, and most importantly, figure out what it all means for your everyday life, your financial future. And joining me to help make sense of these, well, pretty dynamic waters and connect the dots is our expert on digital finance.
Thanks. Yeah, it's definitely more than just a busy news week. I mean, what we're seeing are these foundational shifts, things that are genuinely reshaping how digital finance plugs into national economies and, how we all transact day to day. It's quite a moment.
Okay, let's jump right in then. Starting with the biggest news, right here in the US. A landmark moment, really, with the final passage of the Genius Act and those companion bills.
That's the one.
Passed the House, what was it, 308 to 122, pretty decisive, and signed by President Trump on July 18th. Now, everyone's talking about it because it mandates audited reserves, transparency, and this dual federal state oversight for stablecoins. What is it about those specific things, the audited reserves, the oversight, that makes this such a game changer, especially for the big companies?
Right. That's the absolute core of it. This legislation, and yes, specifically those clear rules around having audited reserves and that dual oversight model, it provides the exact legal certainty, the robust sort of consumer trust framework
Yeah.
that giants like Walmart and Amazon, they've been waiting for this. Until now, the legal gray areas, a potential hit to their reputation, it was just too high for them to really dive into stablecoins at scale. Now the door is open. They're essentially empowered to launch their own stablecoins. And that could fundamentally transform everyday payments. Think about a future where transaction fees could be slashed dramatically.
hmm
We might rely much less on traditional banks for just, buying things.
So less friction in just daily spending.
Exactly.
Yeah.
This isn't just about giving regulators peace of mind. It's about building a safe, clear on-ramp for crypto to go mainstream. Real mainstream use.
And the market reaction, well, it was pretty immediate and enthusiastic, you could say.
Huh.
Right after the U.S. law passed, we saw this broad rally. Bitcoin briefly touched, what, $123,000? Pretty impressive. And Ethereum surged about 20%, hitting around $3,500.
Yeah, big move.
And that pushed the total crypto market cap past a really significant milestone, over $4 trillion. From your perspective, what do these huge numbers, these market jumps, what do they really signify beyond just, a good week for investors?
Well, it's fascinating because these market highs, especially when you pair them with the incredibly strong inflows we saw into the ETFs, the exchange-traded funds,
Right, the ETFs, big numbers there too.
huge. We saw $5.5 billion go into Bitcoin ETFs just in July, and another $2.9 billion into the Ethereum ETFs.
Right.
That combination, the price action and those massive ETF inflows, it clearly reflects growing institutional confidence. Real money, serious players are getting involved.
So pension funds, wealth managers, that kind of thing?
Precisely. ETFs give them a regulated, familiar way to get exposure to crypto without, having to hold the actual coins themselves. These inflows, they signal a big shift. Traditional finance is actively integrating crypto into portfolios now. But, and this is crucial for you listening, while this momentum is undeniable, volatility is still very much part of the picture here.
Always a reminder.
It's just the nature of investing in this space, right?
Yeah.
Even with major gains happening, you've always got to be thinking carefully about the risks involved.
Good point. Okay, so it's not just the U.S. making headlines. Let's shift gears, go halfway across the world. Pakistan is showing us a totally different playbook, really embracing digital finance with some incredibly bold strategic moves.
Yeah, this is really interesting.
They've enacted the Virtual Assets Ordinance 2025 that kicked in July 8th, and they set up PVARA, the Pakistan Virtual Assets Regulatory Authority. That's going to oversee exchanges, wallets, stablecoins, the whole lot. But it's more than just rules, isn't it? They're making these big strategic investments, allocating, get this, 2,000 megawatts of power specifically for Bitcoin mining and AI data centers.
2,000 megawatts, that's a serious commitment.
Right. Plus, they've got ambitious plans for a national Bitcoin reserve. And they've even brought in Binance's CZ as an advisor. What's driving this? I mean, what unique economic or maybe geopolitical factors are pushing Pakistan to make such an aggressive pivot? Could this be a model for other emerging economies?
It really looks like a prime example of a nation making a very calculated, strategic pivot toward digital finance, as they seem to be framing it. Pakistan isn't just testing the waters. They're positioning this as critical national infrastructure, a major adoption play. There are probably several drivers. Maybe they're leveraging, an existing energy surplus domestically. They might be aiming for greater financial inclusion. Pakistan has a huge unbanked population.
Right, that makes sense.
And potentially, they're trying to position themselves geopolitically within this new digital economy. That level of commitment, dedicated power, the national reserve idea, bringing in someone like CZ, it signals real national ambition. And yeah, it absolutely offers a fascinating blueprint for how other developing nations might look to integrate digital assets.
And it's just so interesting when you look at the global regulatory picture, how diverse the approaches are becoming. Like Pakistan, as you said, making these big crypto plays, but they've also started a pilot for their own digital rupee, a CBDC, a central bank digital currency. That aligns with their financial modernization goals.
Right, so they're pursuing both tracks.
Exactly. But then you swing back to the U.S., and the companion bills to the Genius Act include the Anti-CBDC Surveillance State Act that specifically blocks the Fed from issuing a CBDC. And it also defines crypto assets under the CFTC's jurisdiction, the Commodity Futures Trading Commission. These feel like completely different philosophies at play, don't they?
Oh, absolutely. And what's really crucial to understand is how these contrasting approaches, Pakistan piloting a CBDC, while the U.S. blocks one and puts crypto largely under the CFTC, they underscore very different national strategies and, frankly, different concerns. Pakistan's move seems tied to that push for modernization for financial inclusion. They might see a CBDC as a tool for efficient, low-cost payments for everyone, whereas the U.S. legislation reflects deep-seated concerns about potential financial surveillance, government overreach that could come with a central bank digital currency.
Privacy concerns.
Exactly. And that move to define crypto assets under the CFTC, that's huge too. It basically categorizes most of them as commodities, like oil or gold, rather than securities, like stocks.
And that matters because
it has profound implications for how they're regulated, how they're traded, how they're taxed. It sets up a clearer framework, arguably a more innovation-friendly one for many assets than treating them all like traditional stocks under the SEC might have. It just highlights the really complex balancing act each country is navigating between fostering innovation and maintaining control.
So while Bitcoin and Ethereum have definitely been grabbing the headlines with these big moves.
Understandably so.
Yeah, it's clear the whole crypto ecosystem is buzzing right now. I mean, Ethereum itself is trading strong near, $3,600, up about 2.5% today alone. But it's definitely not just the top two, is it? Seems like this wider confidence is kind of rippling outwards.
That's exactly right. And that broader activity, across various altcoins and even in the NFT market, that tells us something important. It indicates a healthy, expanding ecosystem. It's not just about Bitcoin and Ethereum anymore.
What else is moving?
Well, we're seeing Avalanche up around 4%, Uniswap up 3.6%, Solana's holding steady around $177. Litecoins had a really good run, up nearly 10%.
Yeah.
Cardano's seeing gains of 1-2%.
Okay, so broad-based games.
Yeah, and even the NFT market, which, some people had kind of written off.
Yeah, it went quiet for a bit.
It did. But it's showing renewed life. Volumes were up about 29% this week alone, hitting almost $160 million. This kind of diversification across different types of digital assets, it's a key sign of the market maturing. It suggests that institutional confidence and mainstream interest are broadening out, filtering down into all sorts of corners of the digital asset space.
Okay, so after covering all this ground, the U.S. laws, the market surge, Pakistan's strategy, the global differences, the altcoin action, let's bring it back home. For you, our listener, listening right now, what does all of this truly mean for your daily life, for your financial outlook?
Right, let's try and synthesize the key takeaways for you. First off, there's regulatory clarity. What we're seeing, especially from these new frameworks in the U.S. and Pakistan, it provides real, concrete support for institutional confidence. That paves the way for more mainstream crypto use. For you, this could mean more regulated, maybe more trusted ways to interact with digital assets down the line.
Okay, clarity is key. What else?
Second, think about the massive potential for payments transformation. The fact that big retailers like Walmart and Amazon might soon issue their own stablecoins, that could fundamentally reshape how we pay for things. It might offer you new choices and potentially much lower costs in your daily transactions, maybe even bypassing some traditional banking fees.
Cheaper, easier payments. Got it.
Third, these strategic infrastructure and adoption plays, like what Pakistan is doing with mining and national reserves, That signals a real global ambition in digital finance. And that will undoubtedly impact future access and opportunities for you. Doesn't matter where you live. The whole space is becoming more interconnected globally.
Right, becoming part of the national fabric.
Exactly. And finally, from an investing insight perspective, those market milestones like the $4 trillion total market cap and the huge ETF inflows, they definitely reflect very bullish sentiment and growing engagement from traditional finance. But, and it's the important but, as we always remind you, volatility is still a key factor. It's inherent in this space. So you should always approach investing here with a clear understanding of those dynamics and your own risk tolerance.
What an incredible deep dive. It really does feel like we've covered a week that marks a genuine turning point for digital finance, that the whole landscape is just evolving so incredibly quickly. And these developments could genuinely impact your daily life, your financial future, in ways we're probably just starting to fully understand.
Absolutely. And maybe this leaves you with something to think about. With entire nations and major global corporations now actively stepping in to shape the future of digital currency and payments, how will your relationship with money and how you actually transact day to day, how will that truly change in, say, the next 5 years? It's a fascinating question.